Jordan from LA. Jordan, I love you. I miss you. Tom also requested this one. This is AMD. Paul, tell us about this company.
So we've talked about AMD before. So
pillar number one is PE ratio. Want this less than 20? I can see it's pretty bad, Paul.
the PE ratio is 125. So this is already showing 6 times more. Now keep in mind, if you divide by 6 times, your 13 times PE, price of sales, becomes 2.1 or something like that. Intel's is 2.8.
Pillar number 2 is profit margin. How are they doing?
Profit margin here, 14%. So we got a check mark here. And
Revenue growth over the past 5 years?
4 billion, 4.3, 5.25, 6.5, 6.7, check mark.
Pillar number 4, which is profit growth, Paul?
Lost 660, lost 500, lost 33, made 337, made 341.
They're making money, Paul.
I will give them credit, but look how long they lost money for.
Pillar number 5 is number of shares
Oh
outstanding.
boy, 783, 835, 952, 982. They love issuing more shares.
Oh boy. Let's do current assets greater than current liabilities. This is pillar number 6, baby.
5.5 billion in current assets. Current liabilities, 2.4. Excellent. And I will say this, guys, they only have $3 billion in total liabilities. So 5.5 greater than 3.15. They have about $2.3 billion left over. So you can take their $110 billion market cap and take 2% off of that. Congratulations. It's still a very positive thing. It's hard for companies to go under when they have more cash on hand than liabilities, which is a great thing. It's a major check mark. I love it.
Free cash flow, Paul. Pillar
All right,
number
let's
7,
do
the
this,
big
kids.
granddaddy of them all.
So 4 million? This is bad. They have no free. They have 1 year of free cash flow before this year. Let's go to their trailing 12 months. How much money they make in free cash flow? They were a $110 billion business.
Oh, look at those zeros. Oh, keep going.
And they made $700 million in free cash flow. Steph, do that ratio for me real quick.
So 157.41, 157.1, 157.
So their price to free cash flow is 160.
We want it to be less than 20.
You want it to be less than 20. Every dollar of free cash flow, you got to pay $160 to get. So if you give me $160 today, every year, I'll give you $1 back. Good investment or bad? Now, are they growing a lot? We saw that they're growing. Are they growing their net income a lot? Yes. Their revenue has doubled in 5 years. But remember, guys, just because if the free cash flow doubled again from here, you're still only at 80 bucks. 80 times free cash flow. Double again, 40. Double again, now you're at 20. This has got to go up 8 times. Your profit, the free cash flow has to go up 8 times for them to get there.